Hello and welcome to the Stock Planner channel. Today I'm looking at Salesforce, stock ticker CRM, the premier software package for marketing, customer support, and business applications. It's the Excel spreadsheet on steroids. This is the one that everyone's talking about being the stock of the century. Well, maybe not the century. How about the decade? Here's a Tradingview chart on the daily time frame. That doesn't seem so hot. Let's go out to the weekly. And by the way, Tradingview is a free software package for charting. And you can do some paper trading. It has a scanner. It's pretty good. And you can create a watch list and only scan for the stocks on that watch list, which is a real good thing. Weekly, looks like there's been a downturn around November of last year. Some people think that's when the recession started. I think it started definitely in January. Well, that doesn't seem like the stock of the century or the decade. Let's go out to the monthly. I think this stock has been around for a while. I think it was in the early 2000s, 2003 or something, this came back. But it's primarily in business applications. If you have a customer support business, you probably are using Salesforce. Nice move up. And if you've been smart, bought out here and added. But the last few months, 5 months, 6 months, took it all away. I started using Twitter again, since they're starting to go back to free speech. And I don't know much about this guy, Fired Up Wealth, but I've subscribed to him. I've followed. I'm not following the actual topic of CRM, but he's listing out the stocks that he thinks are good earners for the next decade. And he has them broken into critical sectors, critical industries. And I like it because I have many of these same industries on my watch list. 5G, Internet of Things, cybersecurity are all things that I think are important. And he has big data here. Snow, Paltar. I gotta see why he's talking about that. And that Paltar, I think, is healthcare. And they say that's the stock of the decade as well. And I know it's been taking a hit. I know that's the one that ARC, Kathy Woods, is all hepped up about. Anyway, I took this list and put it on a note. And I'm going to go and make sure that they're either on my list or I understand why and revisit it. And the first one I'm going to revisit is CRM, but it's not. It's because I thought I knew what the business was, and I needed a better understanding of what it is. Okay, because anyway, that's a good sign for Twitter. You might want to invest in that. I'm starting to use it again. So let me tell you what I know about CRM. It's supposed to be the next generation of spreadsheets. You create spreadsheets and they analyze the data just like you can in Excel. But in CRM or Salesforce, you can control who has access to the data, restrict it, and put constraints on who can analyze what with the data that you have. This enables you to share the data with a large amount of people within your organization, but yet restricting which organizations and which people have access to that certain parts of the data. In other words, you wouldn't want to have a tester have access to the cost of producing a particular software package. It's not needed for the job, so you can restrict that data. But you would want a salesperson to know how to price it, and they would need to know the cost. And what makes Salesforce very important is that most customer service or customer support centers use this in some form to collect data on the errors or the problems with the products. It allows you to do some email marketing campaign, and it's cloud-based, where all the updates are updated simultaneously. You always never have to worry about updating the software. It's all updated in the cloud. So maintenance costs are cheaper, allowing many different people to access the data and share it within a large organization is what makes Salesforce important for industries and companies. You can't do that with a spreadsheet. You can't customize it that level of detail on a spreadsheet. Now the problem is Salesforce does charge by the user, which is around $1,000 per user. So if you have a small company of 100 people that will need to access this tool, that's $100,000. It's costly, and the languages you can program this in, it's very flexible, proprietary, and you're pretty much stuck. If you have a development team to develop applications and routines that integrate with Salesforce applications, you're going to have a sizable investment, and it can't really change. Now, there's not a lot of competitors out there, so either you use it or you don't. And so that's what makes this company attractive. It has a competitive moat. And that's coming to the end of my knowledge. Salesforce, sales management, customer support, and marketing. But then why is this happening? Well, we have inflation and a recession on the horizon. Companies are pulling back. I suspect over the last few years, with a rising stock market, that this stock may be overvalued, and now it's just adjusting to its true value. We'll see that in a minute, and we'll take a look at the target. Starting my fundamental analysis with Finviz, CRM, downward channel. It's at the bottom of the downward channel. Some people would think it hit that and bounce up. Hit it, bounce up. It bounced up a little bit. Will it bounce up a little bit and then go? Who knows? Just lines. Target price according to Finviz is 289, way up here. Well, I don't see that happening anytime soon. Maybe in the next decade. And this is the thing. Fired Up says these are the stocks you should look at, and I believe he's talking about this next decade. And I think he's right. Short term, you have to go ahead and be a little bit careful. Recent upgrade, Roth Capital, to buy. Zach's article, Salesforce tips more than broader markets. Earnings is coming up, so you be careful about watching it. Here's going out to the daily again, and you can see that earnings is occurring on 31 May. A lot of analysts following CRM, looking at tip ranks. It's another free tool I use. I like free. It says 282. It's about what Finviz had to say, and it takes the average to get that. Tip ranks is saying buy it now. A smart score of 6 though, and the technicals are very, very negative. Insiders have sold their shares. Hedge funds are buying it. That's a good sign for it. As I said, Salesforce is a cloud stock. And this is a tip ranks article saying it has become cheap, and it is. Looking at Salesforce in SimplyWallStreet, it says it's trading below its estimate, SimplyWallStreet's estimate for fair value. So they're saying it's undervalued and is forced crested to grow by 14 or 15%. Sweet. But this is a snowflake, and we want it to be big and green. It's not, but the health of this company is pretty good. Future looks bright. Doesn't pay a dividend, and the valuation is undervalued. So other competitors, I haven't heard of these companies. That's the same down slide. And the reason why I like SimplyWallStreet, I have a subscription, is that I get alerts on news, and it's Seeking Alpha. It's saying don't add anything now until after earnings. And this is a negative article saying that it's overvalued. Its intrinsic value is greater than the, well, that's the good article. Intrinsic value is above the share price. Yeah, there's the price, and the fair value is 265. But I think that this stock is overvalued to begin with. Let's use another free tool just to take a look. This is stocks to own. Typing in CRM. There's the market price, 160. Bear market. Well, we know that by looking at the chart. Looking at the PEG ratio for this is 1.72, which suggests that this is overvalued at the moment. But looking at the value price using various different analysis techniques, a value price of 435. So that mixed messages there. So back to trading. The analysts say it should be trading up here eventually, yet the market's going down this way. The PEG ratio is greater than 1, so that says it's overvalued. And I suspect this is what the problem is with Salesforce. But I think, and you can believe what you want, because it looks like a lot of the analysis tools that are free are saying it should go up. But I think it's going to hang in this area here for the summer. And I think we're going to still have a little bit downward slant, because I don't think this recession and inflation is going to improve anytime soon. We have missteps occurring. So let's see if I can find something that will have in the next 3 or 4 months that it will go down to, it's 156 to about 159, and take it to about 150. So if it gets below 150, I'll profit. Looking for a deal that doesn't cost me more than about $500, trading out to December or January, that if it hits 150, I'm going to profit. Going to Optionstrat, which is another free analysis tool, typing in my preferred stock tipper, CRM. I want to go out to January. This is a bull put spread, which means I think it's going up, but I think it's going down. Bear call spread. So there's going to be something happening here, a split, a merger, or special event. So it can't go out that far. Let's see about December. And we want to go below 150, and we want it to be only putting up about $500. We'll bring that down. $500. I'm getting $300 in credit, and the max loss is $200. I like that. So we're hoping it gets down to here, 150, and if it does, let's just say we get around $50. And I'm doing that for math. If I'm making $50 or 40, but you know, 50 on a risk amount of 200, it's approximately 25%. 25%, and I need to do it before the end of September, and I can take my profit anywhere along that line. And I want to restrict my losses to around 8%. Let's say it's right here. I don't want to lose more than $50. So if I go early, I'm risking 50 to make 50. But this thing could drop, and I have all this opportunity here to win. And if I want to stay in the trade longer, my max profit is going to be $300 on a possible 210 loss. I like those odds. I'm thinking it'll go down. The fundamental analysis said it will go up. The chart looks like it's going down. Please leave your comments in the description below whether you think it's going to go up or down. My break even is 152, 153, 153. 50 is about here, one little above it. As long as it stays below that area, is it going in that area in the next 5, 6, 7 months? $50. Trying to keep my losses at 50. I have to put margin reserve of $500. I'm not really using margin. I'm just preserving it in case I get something bad happens. It's going to use that. Then I have to pay interest. Well, I like this trade. Remember to do your own due diligence. Like and subscribe. Engage. Ask some questions. Make some comments. Criticize from a point of view. If you do all those things, your trading will get better, because my trading has gotten better since I started engaging with you. I've become more consistent because I've slowed things down and thought it out a little better. Catch you on the flip. Happy trading.